We've got more news to get to here on the show today. I want to talk about the U.S. middle class. Startling new report out this morning about just how bad the U.S. middle class has been suffering over the past couple of years. It's continuing to go down and down and down. So look at this new report from, this is from Bloomberg here. And I'm just going to pull out the kind of headline here. Top 1% of U.S. earners now hold more wealth than all of the middle class. After years of declines, America's middle class now holds a smaller share of U.S. wealth than the top 1%. The middle 60% of U.S. households by income, a measure economists often use as a definition of the middle class, saw their combined assets drop to 26% of national wealth as of June, the lowest in Federal Reserve data going back 3 decades. For the first time, the super rich had a bigger share at 27%. The data offered a window into the slow-motion erosion in the financial security of mid-tier earners that has fueled voters' discontent in recent years. That continued through COVID-19, despite trillions of dollars in government relief.
It's interesting to note the asset classes, though, that the middle class no longer had. So it used to be that the middle class at least understood that they needed to hold some kind of tangible asset in order to...
Like a house.
Well, yes, to secure their wealth, right? So 3 categories: real estate, equities, and private businesses, is what slumped in just one generation of the middle class. So 1 generation ago, people who had sort of modest earnings understood that you had to own some other asset to back up your financial life. And that's just no longer the case anymore. And I think that there's a reason for that. It seems that the middle class has less financial education, and generational wealth does not pass down in the middle class. It only passes down in the top 1%.
I mean, the top 1% represents about 1.3 million households here on your screen who roughly make more than $500,000 a year. So out of a total of almost 130 million.
So that's what they mean when they say top earners. They're talking about like regular working people.
Yeah, because, well, I mean, who make more.
Households.
Household
This is
income.
household income.
Household income. So, you know, and think about that, right? These numbers are probably skewed because I think, David, maybe what you're getting at is this idea that, well, like a doctor earns a paycheck, right? But like Warren Buffett, he's earning passive income, right? So his income is different as an investor than a doctor who works at a hospital and is making really good money. Does that make sense? It's a different animal. And it's a different tax bracket, quite honestly.
Absolutely it is, yes.
But interesting, so we'll look at some of these charts here, right? Like, look at this, the rise of this, you'll see the middle class here. The middle 60% is the line on the middle of your screen here, just continues to go down and down and down. And then the orange lines below, or brown, whatever color that is, it's kind of like a beige, right? What would you, I don't know, khaki?
Gold.
Gold?
It's gold.
Gold,
yeah.
okay, that makes sense. Gold is representative of the 1%. And now it's passing that for the first time.
Well, and my other point to that was also that if they're actually earners in the economy, then they're also the ones getting taxed the most. So are they taking that into consideration, how much they pay in taxes? And I'm not talking about, you know what I mean, not the Warren Buffetts, but the doctors. The lawyers.
Yes, absolutely. Those type of earners pay the highest taxes. But you know, when it comes to high net worth individuals, they understand how to make financial moves to mitigate taxes in a way that just simple paycheck employees, middle class, do not. They can make investments. They can make overseas investments.
Right.
They understand how to have pass through losses. And so I'm not saying that they shouldn't have a way to mitigate their taxes, because a lot of times those investments do bolster the economy and help other people. That's sort of the intention of those tax breaks. But it's, yes, you know, the saying is when the government wants to, the government will always pay itself first, and who's the easiest that they can reach down into is a paycheck employee, right?
Right, because they have access to that money before you do, and so they can easily take it right out of there. It's harder to figure out like where you're offshoring stuff if you're Warren Buffett, you know, like
which
where
is
are you
exactly
hiding
why
stuff?
they want to monitor anything over $600, because this isn't about the rich. It's about, you know, the poor. Like everything, they just want to monitor us. It's like, what was the biggest concern with the stimulus, the second or third round of stimulus? We don't want to give it to people who saved the last one. Like,
Right.
Right. Or I was going through some notes this morning on some old shows from August, and I noticed a show that we had done where I talked about how Congress was more, instead of worrying about the tax cheats, which would have been upwards of $700 billion, instead they wanted to focus on the unemployment cheats, which would have brought in like just a sliver of money. So they were going to go after the poor people and the lower middle class, and they were going to focus on the people that maybe took advantage of the unemployment benefits for a week or two during the pandemic, rather than going after the tax cheats that would have brought in billions of dollars. Congress.
Right. And so the president's $3.5 trillion infrastructure package and some of his other packages have included things like childcare, preschool credits, child tax credit, because his idea is that if we help the middle class sort of care for each other and their family, it helps them to be able to earn more. Not sure if that's played out, because the rest of his package is so punitive for, I would say, middle-class business owners especially. And so I'm troubled by the fact that the middle class no longer owns assets like real estate, equities, and private business, but the current stimulus packages and the infrastructure package wants to make it harder for them. It's particularly onerous on, say, small banks, small business. It's going to change the taxes for them. You will only not pay taxes if you're losing money, right? But anyone else making money as a small business is going to pay considerably more taxes when you break it down. And so we're saying, the middle class, we want them to do better, but don't own things. Just do better, put more in your 401k, partner with us to invest in the stock market, but don't actually go out and buy real estate or a business or anything else like that. If you do that, we're going to take a big scoop of it ourselves. Right, Grover?
Right, Grover? Yeah.
Right. It's totally crap.
boy, that really got him fired up.
Yeah.
He doesn't like that. I don't like it either.
He doesn't like this. He agrees with Dan. Grover, thanks, man. He agrees with Dan Price. Dan Price says, the top 1% has long been richer than all poor people combined. Now they're richer than the entire middle class, too. And the Senate is cutting services for the poor and middle class to avoid making the 1% pay the same in taxes as everyone else. To which,
Look, I'm not one of those tax the rich kind of people, because I think that those are distractions. They're populist talking points. I don't think the rich are ever going to get to a place where they're like, you got me, right? It's these laws that they're putting into place saying that they're really going to get to Jeff Bezos and Elon Musk and Bill Gates. They really get to your local businessman more, businesswoman, business person, more than those people. And so these talking points don't get us anywhere until we really start to see what it's doing to the middle class.
right. Well, we see these numbers now. And this is the point about trickle down, like this person says. But it's going to trickle down any decade now. They promised. We just have to keep giving them more and more, and then it'll eventually help us all.
Assets, right? Then buy something other than a stock fund. But that's not what we're trying to tax those more. In fact, certain taxes, like in the new proposed tax plan, certain stock transactions for big businesses would not be taxable, versus for middle class they would be, right? Who are we trying to?
Well, and it's
let's not pretend that by this, like, we're going to tax the wealthy, that we're going to solve the problems, because that is not what this tax plan does at all. It tries to hurt it. No, it's not.
And I'm with you on that. And the thing is, like, I think that it has to, like, I honestly don't understand how they subsidize and they give these tax breaks to these big successful companies, but that is like the reverse of what they should do. What they should do is they should give these tax incentives to small startups, small businesses, and help people get started, not help the ones that are already successful. And then as they grow, then their taxes increase, then they do this, and then they're paying more. And it's like you're rewarded by the success of your company, with not tax breaks, but with other things, you know? So it's like, because you have a successful company. So it's like complete backwards thinking. It's always detrimental to the middle class and helps these big companies, when it's like, if you reverse that and did it the other way, I think you would see a lot more, it'd just be a lot more fair, I believe.
Yes. So, not to give ourselves a big plug, but I will. We have a Financial Freedom Academy, where we actually talk about how to, as a family, middle class or otherwise, actually build assets and not passively partner with the government to just invest in stock, but actually own things, real things. So this is something that we are passionate about, and we encourage you to check out Financial Freedom Academy if you would, please.
.com, yeah. So financialfreedomacademy.com.
Oh, I thought it was.
Yeah.
Is that what morninginvest.com/freedom goes to?
You can.
That's
That's our freedom cheat sheet, but you can go grab that as well. That'll help you tremendously to learn how to figure out what kind of passive income you need to create in order for you to build wealth in your family. What are your monthly expenses?
And
right?
how do you actually own things, right? So again, this statistic that the middle class no longer owns anything other than a fund that's partnered with the government for some tax advantaged stock plan, right? We talk about actually owning things that back up your wealth, like assets, how to acquire assets, and it's meant for families to work together. And I believe it's nine-part course.
Yeah.
Maybe 10. There's a bonus in there, that's why. So anyway, check out Financial Freedom Academy so that you will not be in these statistics. You go own your wealth because you should.
Thanks for subscribing to the channel. You can also become a channel member by going to morninginvest.com/join, where you can stick it to the mainstream media and support independent journalism. We're able to bring you the stories that you won't see on any of the major billionaire-backed networks. Thanks so much. We'll see you next time, everyone.